April 9th, 2024. Sorry, my voice is a little messed up. I got some allergies today. So it's going to talk about wave trading and entries when breaking previous high or low, stop at previous high or low, 5 wave moves daily in anything worth trading, body gaps, gap and go at retests of gaps, gaps valid until filled by a second candle, and engulfing bodies. So the only thing you see on my chart here is just 1 minute candles. I trade on a 1 minute time frame, and you see gray candles, red candles, and green candles. The red and green are essentially pivot points in a 10-minute period, and then the down arrows, red, and the green upper arrows are where a body is engulfing the previous body. So here you can see that this body here on this red candle is completely engulfing this body on this candle, and it's in a script, and so it does a mathematical evaluation. As long as the open and the close are the same, the price is parallel and to the top and the bottom, as long as this engulfs all of the previous candle, you'll get that signal. Same thing here, that this gray candle here with the green arrow is engulfing the previous candle. So let's talk about wave trading. It's worth trading anything. You can trade anything that consistently has 5 wave moves. So 5 waves is here. What you see is a down move. This is considered a wave 1, and then kind of a retrace and a down wave into a 2. You got some sideways action. Down wave 3, down wave 4, down wave 5. I'll explain more of that in this video. And you can pretty much just start at market open or your previous signal in the aftermarket hours. Don't go back more than just a few minutes though. So that's why I typically even ignore those and I start at market open, but you can go back a few minutes like I said. So this is the micro NASDAQ futures price in this first wave. It starts going down. So we don't know if price is going to go up. We don't know if price is going to go down. I mean, maybe you have an indication, but really you should just have no bias at all. If you're wave trading, just let the waves guide you. So price comes down and then it goes back up and then it starts to come back down. So at this point here, when price is going down, how do I know that price is no longer going down? I have to have candle body over candle body. So I find my lowest candle body, which would be this green one in this particular case, and then this candle body here is above this one. So the way I trade is I know that price is no longer going down. Yeah, it's obvious price is going up, but if I'm going to be interested in this in a short, if price starts breaking this previous wave low. So you can see that price goes up and it break in terms of candle bodies. This is my highest candle body right here. Price does break on this kind of red doji and this gray doji. These candle bodies are above this. So that is breaking the previous wave high. It's not really a wave though, it's just breaking the morning candle body highs, but it's not actually breaking the high. And then you can see the price starts coming down. So on this candle, how do I know that price is no longer going up? Well, the obvious price is going down, but technically you can see that this candle body is now under this candle body and this candle body. So if price is going to start coming down, we should get a close below the previous wave body low, not the tail. We should get a close below the previous wave body, which we get here, and then you should start to see candle bodies completely printing underneath the previous wave, and that happens right here. So this green candle here, this body, this open and this close is fully underneath the body of this green candle. So this is another wave down. Well, how do I know price is no longer going down? When I see candle body over this, so you can see this little upside down doji or upside down hammer right here. This candle body is above this candle body right here. So I know that price is no longer going down when I get candle body over candle body. And what we need to see for continued momentum to the downside, we need to see price closing below this. So price does start to go candle body under candle body right here. So this is good. Looks like the short's going to continue, but then we get the fake out and price closes then above this previous wave high. So to an extent, this is a violation. If price is going to go lower, why is it now breaking previous wave high? Well, the good news here is on this particular day, price doesn't go above these. Let's just call this the wave one high, the beginning wave. So you would have gotten stopped out here. If, let's say you had taken a short prior to price breaking this. Let's say you'd gone short anywhere in here, you'd had to stop out when price went back over this candle body or the wick here. So you got stopped out somewhere on this red candle. At this point, price starts going back up, and we have this red candle body is over this candle body, but this is still not. This gray candle and this unfilled candle are still above this wave one low. So you really can't start going short until you get to close below this, because if you'd have gone short, then you would have got stopped out again right here. So then price goes back down. It still hasn't broken in terms of a close, hasn't closed beneath this yet. You finally get that close on this candle, but this candle here, where I'm flashing my cursor, it's still parallel. It's touching, it's engulfing part of that green candle. So you could take the short here, and then your previous wave high then is your stop, which is right here. So we broke previous wave low. So that's our entry when breaking previous wave high or low. So if we're looking for the short, we broke the previous wave, got short right here, the stop at previous high or low. So we're going short. So the stop would be at the previous high right up here. You can choose to use the wicks or the candle body itself. It's a matter of your risk tolerance there. And you can see price then goes sideways for 3 minutes and then starts going up. So right here, this actual doji, it's hard to see, but you can look at it on your charts, is actually above this candle body. So this is now candle body over candle body. And if price is we need to see price start going down. Well, it fails and starts going up. And so our stop is going to be up in here. And you can see we just got wicked out. So how would you still kind of believe in the short? You believe in the short because these candle bodies do not close above these previous candle body highs here. So yeah, there's a higher high with the wick, but the candle bodies are underneath the previous wave high. So at this point, where can we go short? Can't really go short until price closes below the previous wave low, body low, which would be right here where I'm flashing my cursor. You can take the risk short when you see price going candle body under candle body. So this candle body is underneath this candle body. If you take the short here, then once again, your stop is back up here, a previous wave high. You're going to sit through a slight pullback, but ultimately you need to see price closing below this here. So right around here is when price closes essentially right at this. Maybe it's a tick or two below this. Let's see, this one opened at 34.5 and this closed at 34. So this closes 2 ticks below. So that's your signal to go short. And you have to know these numbers ahead of time before you're trading. You absolutely have to know these numbers. So you got plenty of time to go ahead and put your order in. And you could have had your limit order already preset to go short when price closes back below this. At this point, you're looking for then candle body under the previous candle low. And so you get candle body, and then this thing really starts to trend. Candle body below, candle body below, candle body below. We get a hammer here, and then we get candle body over candle body. Okay, so we have to definitively say, okay, well, price is no longer going down. We don't know if it's going to retrace back all of this. But if you're going to get a multi-wave move down, so we're into this wave 1, wave 2, and this would be wave 3. So we still got a couple waves to go if it's really going to trend. So you would stay in the short at this point. You just move your stop down from up here to previous candle body high. So you're not moving your stop down much. You can move your stop further down if you wish. You just have to be prepared that you're going to get stopped out. So what you see on my chart are you see these gold wedges pointing up. This is when candle body is clearly underneath the previous candle body, and it can just be by 1 tick. So if you're trading a stock that trades in pennies, it can just be a 1 penny difference between the previous candle body and the current candle body. So if price is going to start making another wave low, you've got to see it close below this one now, previous candle body. You get the close, you've got to start seeing candle bodies print lower. So this one right here prints lower, and then candle body keeps, and then price starts moving down, and then you get this doji down here. Doji is just where price can actually stop and reverse, not by much because it doesn't take much of a candle body to print above the doji. So here, this candle body, this is candle body over candle body. You can see that by my blue wedge. This candle body is below this candle body, even if it's by 1 tick or 1 penny, depending on what you're trading. Here you can clearly see this is candle body over candle body. This is where you'd expect price to reverse again. So if you got short here, or if you're waiting for the short here, your stop is now right up here at these candle bodies, or the high of that wave, however you prefer to trade it. So a lot of times when you're seeing gaps between the candles, you want to see gap and go. So right here, the price breaks down under the previous wave low, it gaps lower. This is always a good indication that price is going to keep trending in that direction. Same thing here. Price came up, gap down, and it keeps going down. Now, price does go sideways here in this about 30 minutes of consolidation. And so you either get stopped out there, maybe you got faked out and you lost your conviction in the short. But the reality is, as long as you're trading waves, you don't lose your conviction in the short. You just simply wait patiently for the market to come back down. So the gaps remain valid until filled by a second candle. So this gap right here between these two bodies is valid. Yeah, this wick fills the gap, but it has to be filled by a secondary candle. Well, that gap doesn't get filled either until this candle. It definitely gets filled on this candle. So that gap right there is no longer valid. So you don't expect price to essentially just you keep ripping at this point. You'd expect that once the gap gets filled, if the trend is still going to be intact, that price keeps coming down. And what I mean by the trend, the longer term trend for market open to where we are now, it's a slight downtrend, negative slope of the line. So you expect price to curl back down and start moving down. And then you'll definitely want to pay attention to volume. This video is not about volume, but whatever it is you're trading, like I trade micro NASDAQ futures a lot, so I'm looking for anything that gets my interest. Is anything over about 8,000 contracts and 10,000 starts to get my interest. And so this was actually 16,000 or 15,945. No, it was 21,039 contracts. So at this point, it's either going to be a reversal soon, or we've broken some previous support looking left, maybe from a day ago or a few days ago, and you're expecting price to still continue that downtrend. So in terms of reversals, if you're going to trade a reversal, I highly recommend that you're constantly looking left, not just at the overnight session, but the previous days and going back several days, so you understand where those support and resistance areas might be. Mark those on your chart. So at this point, where can you go long? Well, my rule for going long is you can't go long until the previous high is broken. So let's say that you're down here, you've seen this about 300 point drop, 230 point drop, and you're thinking you might get a slight reversal out of this. you can't go long until price breaks previous wave high. So price is still coming down, price goes up, breaks previous wave high. So why is it breaking previous wave high? Is this going to be a fake out, or is this going to be a longer term reversal? So I would take the long here because it's breaking the previous wave high, and the stop, once again, I typically use the bodies, or I use the low, just depends on how close they are, but your stop would be down in this area, and you're looking for a price to continue to go up, have a pullback, and make a secondary move, and you're looking for price to just either come in and fill gaps, or just start taking out the stops at the top of every wave where you would expect short sellers to have their stops. Yes, you do have gaps right here. So for instance, I will mark that gap with a yellow line. You got a gap here between these two candles. You got a gap here between these two candles. And you don't have any overlapping candles in this area. So it's poor structure because there's no overlapping candles. And you have the gaps. And what I mean by structure is wherever you can connect 4 sequential candles in a row, that represents a structure. That structure could be either support or resistance later on. And you can clearly see that price did reverse, go up, and took out, let's see how many of those it actually took out. Yep, took out both of those gaps and went into the close all the way up to back up to, where did it close at? Closed right here, about 13,000 or 18,380, which was 18,380. Yeah, right back above here, right back above all of this. Probably, yep, filling this gap right here. So price came all the way back up and even filled that gap today. And then the after hours, right after the stock market closed, I think it did go a little higher and actually fill this gap as well. So gaps are always become targets, but just make sure that you're trading the trend. So what I mean by that is, this is clearly a downtrend. Don't just go long and think, oh, price has to go back up here immediately and fill this gap. No, price can drop significantly depending on what you're trading before it actually reverses and goes back up. Engulfing bodies, last subject here. What you'll notice is, I'll just cover a couple of them right here. This candle body completely engulfs this candle body. That's why it prints this green arrow, right? So when you see an engulfing body to the upside, this is bullish, and you'd expect price to continue its momentum. So you could put your stop right below that engulfing body. Here, as an example of, I'll use two of the red ones, the down signal ones. So this red arrow, this candle body is at least covering, it's parallel to the high or the low, or completely engulfs the high or low of the previous candle. That's why you get this red arrow. Same thing here. It's much easier to see this high. This candle body is like one tick over this, and you can see the low is several points below this one. So that's why it gets this red plot. So if you get into these engulfing candles, literally your stop then just becomes either the high or low of that engulfing candle. So if you got short here on this candle right 1 second before it closed because you saw it was engulfing, your stop is there. Even if you took the short here, your stop is now there. And fortunately, you get candle body under candle body, so you know that potentially high probability this downtrend is going to keep going. And last point is, look for trade things that consistently make 5 wave moves a day. And I'll just draw some circles on here. So this is, if we just use this as high, low, so this would be the wave 1 down. So wave 1 down, you get a pullback. This is now candle body under candle body. So this is the wave 2 down. And then right here, these candle bodies are under that candle body. I don't care about the tails and the wicks. It's all about bodies for me. This is wave 3. You got some candle bodies here underneath this one. And then you got the wave 4. This candle body is now clearly under that. Wave 4 down. Wave 5 down because this doji is underneath that one. Wave 6 down. And you might not always get, a 7 wave down, but we did today. You got the 7 wave move down before you had a reversal. So whatever it is you're trading, just go back and look at the daily charts on a 1 minute and make sure that that stock or index or cryptocurrency, whatever it is you're trading, has 5 wave moves, basically, 19 out of 20 days. And you don't need, as all of you know, if you've been trading for a while, you don't need to hit the absolute top, and you don't need to nail the bottom. All you got to do is catch 1 wave, 2 waves a day to have a nice, successful day every day. Thanks for watching.